What's up, everybody? Dave Bartosiak here, and I've got another chart of the day for you. This time we're talking about super microcomputer, ticker SMCI. Now, if you remember, this is a stock that went absolutely nuts. Was moving kind of in step. It was like an amped up NVIDIA back in 2023. And that thing's really got nuts, where it just went parabolic and shot up over 120 from like $30 in just a matter of like a couple of months, 2.5 months. And then that whole, deep seek thing happened, and then the stock really came under pressure. So you got to think AI with this one. You got to think NVIDIA chipsets. You got to think that's kind of where we're at. So as these AI names rolled over, so did this one. Had a little bit of a rally, got back over its 200-day moving average, and then ran out of gas. But if you see, last time it popped up over that 200, you got overbought on the RSI, which isn't necessarily a bad thing. Actually, in the beginning of the RSI going overbought, it's usually a good time to buy. But when that RSI comes back down and crashes back through 70, that's usually a sell signal. And that's what you had here, off of that peak back in late February of this year. Then the Liberation Day lows, which have been well documented now for most of the market, with this stock down at 30, and it's basically doubled since then. You have a golden cross that took place in late June. That happened while the stock was kind of just consolidating over its 200-day moving average. And since that golden cross, now this 50-day has really turned up. So positive slope on the 50-day, helping to sort of support this action to the upside. But I will note, friends, we are overbought on the RSI again. And if you look back here, it's been 3 times where we entered that overbought. And like I said earlier, when you first cross over to overbought, it's bullish. The problem is when it rolls back under that 70 and it stalls out. So depending on what earnings report comes out that day, today we had a little negativity in our earnings. So this is July 29th. It is Tuesday. A little bit of downside action for the broad market, which is putting some pressure on stocks like this. What I was noting is that this swing high here from February is going to be a line in the sand for this stock. If it can get through this, push through, then you have this other sort of consolidation range that it was in, although there's a bit of a flag happening. You had some higher lows here before it broke down, but this area in general, just above that swing low, is where there's a lot of supply. The swing high rather. There's a lot of supply in there. So even if SMCI does get into this, it's going to have a tough time fighting its way through. So you may get a tap up and a rejection and find some support, which we hope at that time will be that 50-day moving average, as it is still ticking higher. Even today, a little bit of negativity, but this stock has been marching up. They just vaulted off of 50, and you gotta think that you're gonna have some pressure when you have these swing highs over here. Another thing we can do, give you some perspective, is we can draw our fibs. Let's go from that high and hit this low here in November. And you can see, let's go ahead and actually make this perfect. So we've got a high of 122.90. So I got to do is click on this, and we can put 122.90 as our top. And then here we look for the low of, I see 17.25. 17.25 is going to get it. So 17.25. Okay, now you got your more clear-cut fibs. And you can see on that first bounce, that 23.6 came into play. The stock bouncing around there. Then it fought through that 38.2, but eventually stalled out. Now here we are right at that 38.2, fighting our way through. And so now we have sort of a confluence of resistance around the corner. This $70 level. So that's a big fib. 50% fib, that's huge, right? Plus you have the swing high from February. Plus, you have the area where there was support, back in early 24. So that's a lot, right? So that tells me that this 70 area is going to be really, really significant. So what do you want to watch for? So if you're somebody who wants to jump in to get long here, you got to watch for failure up at 70. You can have a stop just on the south side of this fib, this 50 760 something change. So that's a nice little risk versus reward for you there. But I would prefer to wait and see what happens at 70, because you can buy a breakout of 70, or you can short if 70 fails again. The market's ticking up here at all-time highs. It is earnings season. It lends itself to a little bit more of the chop. So I'd be waiting for more actually downside, I think, than looking for upside breakouts on something like this right now, okay? And again, maybe I'm being a little bit shy because of where the market is. Maybe it's because of where I see the, right by all-time highs, and I've seen the action in some of the other names. Just feel like we're getting a little bit long in the tooth. Now, granted, when you put this in perspective, like, hey, Dave, we're talking about a 50% retracement off of a move that already took this stock up to $1.20, so things could really heat up. Yeah, maybe, but I feel like this was fueled by a lot more hype, and now we're being a little bit more pragmatic about things, right? Specifically with SMCI. It's like when these stocks first come out, there's a lot of hype, there's a lot of fun around them, a lot of excitement, and now you've got a whole year and a half of other AI names that have come to the table. So there's more money to spread around. There's more areas you can spread your money around. So these tend to not do as well as they mature as stocks in terms of, not as well, they're not as volatile, right? And you can even see here on some of these volume numbers, we had huge volume back when this thing was rocking and rolling, and that volume has subsided here, right? It's gotten a whole lot less. So that's what I would be looking for, is I'd be looking for a move up to 70. I think actually it doesn't get through 70. I think it fails, and more conservative approach would be wait for some kind of failure and then let it come back down to this 59 and change level, and maybe you can get in again. Or at that point, we'll see where that 50-day moving average is. I prefer the 50-day over a fib level, but that's something you're just going to have to wait and see. That's what I got here for my chart of the day. All right, folks, thank you so much for checking out Super Microcomputer, ticker SMCI, on Dave's chart of the day. I will have another one for you tomorrow. We got to see what's in the news. I think probably it's going to be Whirlpool after its reaction to earnings to the downside. So plenty to talk about there. So thank you so much for checking us out. Be sure to follow the author here if you're on Zacks.com. Subscribe to the YouTube channel and check me out again tomorrow. For everybody here at Zacks, I want to say thank you, and we'll see you